Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of WealthPress. And I bet you didn't think you were going to get my morning video today because the markets are closed, but here we are. Roger Scott does not take his holidays off, and he takes the markets very seriously. And although U.S. stocks are closed, futures are open, and international markets are open, and that's having a major impact on U.S. stocks. So you could see here, the Dow Jones is actually pretty good right now. It's up 154. NASDAQ is up 83. If we don't have any major wrinkles or any surprises over the next 24 hours, maybe we'll be opening up higher tomorrow, which would be really good after a crazy week that we had last week. Now, looking at the schedule, as I mentioned, today is Monday, June 20th. We have a June 10th observance holiday, which means banks are closed, stocks are closed, bonds are closed, but futures are open and international markets are open. And as we all know or have painfully learned, markets are very codependent right now on the rest of the world. Now, big news this week is going to be the existing home sales. Mr. Jerome, I cannot predict the future. Oh, wait till I can. Powell speaking quite a bit. He's speaking on Wednesday and Thursday. We've got the jobless claims. That's going to be big. And we've got new home sales and consumer sentiment. Not a huge week for Fed data. And probably somewhat of a fragmented week. Anytime we have a day off, it lends to a slower start of the week, and it takes till about second half of Wednesday, sometimes Thursday, to really get the volatility moving. So don't expect too much out of the market tomorrow. Though granted, I say that take that with a grain of salt in light of the trading action we've been seeing in the market lately. A little bit of volatility could mean a lot of volatility right now. Now, again, as I mentioned, futures are doing pretty good. They're solid, and I'll give you an update later on today to let you know how they're doing. But let's look at momentum levels and focus on what we need to focus on this week. Again, I'm really, really happy to see that the bond market, after the 8.6% CPI and the stock market fell apart, the bond market did not fall apart, as you can see here. This is really well. Notice the slope that we started in December. This put a lot of pressure on the stock market, but as of late, we've been moving a lot more sideways. The more sideways the more sideways the long bond can go, the better implication there is that the Fed is done or is near finishing their rate cycle instead of starting one. Because remember, the bond, especially the long bond, is pricing everything in advance. And look at the trading action we've had the last, let's see here, this started 4/18. It's been 2 months now. So for 2 months, we've been predominantly, not all the way, we've had a little hiccup here. And this happened when the CPI went 8.6. That said, inflation did not peak a few months earlier, but it may be peaking now. And by the way, folks, this is something I've not mentioned before. Core inflation last month did not go up. If you take away food and energy prices, which is what's causing the most inflationary pressure, and that's not really caused by inflation, that's caused mostly by the global supply chain problem, the issues we're seeing in Europe, still COVID. So there's a lot of that in the market that's confusing investors and thinking that's what's causing inflation, that it's not. Minus food and energy, the core inflation was flat. So there is a really good chance we might have peaked out. And that's why the bond market is not reacting the way it was for the last 6-7 months. And if the bond market starts moving sideways or starts moving higher, that's going to put less pressure on the stock market to go down. I'm going to repeat what I just said because it's very important. The more choppier, sideways, less down the bond market goes, because remember, when the bond market goes down, interest rates go up. So the less the bond market goes down, the more it starting to move sideways, congesting, moving sideways, hopefully up. Dare I say it? There's a good chance that the stock market is pricing in the interest rate hikes and that inflation has peaked. Also, we're having a pretty gnarly divergence here between the RSI and price. So whenever you have price moving lower and the RSI moving higher for an extended period of time, that's usually telling us that price action is going to stop moving in the direction it was moving. And in this case, it was moving down. So in this case, it looks like we're going to get more choppiness, more consolidation, and potentially some upside from the bond market. But the best part is it's not putting as much pressure on the stock market right now as it was the last several months. So 2 months ago, the bond market kind of started going choppiness. And if you look at the Dow and yes, or the SPY, and yes, we have to kind of forget that last little hiccup, but you've noticed we've been kind of moving more choppiness. So I'm hoping that this is the last hooray. And again, look at the RSI. We're grossly overdone. It looks like the market's going to go up from here. Don't know how much, don't know how fast, but it looks like we're overdone, at least for the time being. And if you look at the Russell, the small caps, which typically lead on the way down and on the way up, their downside pressure is not as much as the Dow. Look at the Dow. I mean, look at this downside. It looks like a big, look at that, right? Look at the slope here. That's probably the best way to look at it. Look at the slope. It looks like it's about 35 degrees down. Now look at the small caps. Oops, sorry about that. Oh, let me just get this thing here. Doesn't look as much. It looks like it's just continuing this right here. So the slope is not increasing. And folks, again, I hate to say this, but we've got divergence. And when we have divergence, markets usually turn higher. So again, this is very positive for the small caps. And let's see if we have divergence in the Dow Jones. Oops, I would be surprised if we don't at this point. 1 second here. Let's just take a look and see if we do or not. Nope, no divergence on the Dow, but we've got divergence on the Russell. And again, remember, the small caps started this downside correction a lot faster. This thing did not go up majority of 2021. And we're right now almost at the COVID levels right here. I mean, so again, this is very, very significant because look at when the market, this is COVID right here. Look at where the price action is. We're near COVID levels. And if you look at the profile of the stock, and I'll talk a little bit more about Russell in my second video later today. If you look at the PE ratio, it's at 14 right now. That is not a high PE ratio. That's a pretty low PE ratio. So there's a really good chance that the small caps might be bottoming out. And if the small caps are bottoming out, that's a very, very significant sign for the market. Another major factor is put to call ratio. Put to call ratio is still, all this time, notice, this entire time, since November, it has not gone to the call side, which means markets are still being stretched out. And when you take that in with the momentum levels on the QQQ, this is 50-day moving average. Look at where we're at. Look at 2008. Look at COVID and look at where we're at now. Or if you take that with the momentum levels on the 200-day line, this is 2008, this is 2020, this is where we're at right now. It really does look like we're hitting lows. Another major factor is this. Remember, energy was leading on a cumulative basis? Well, it still is. But on a monthly basis, look where energy is. Look at where consumer staples is. Technology is starting to lead. Communication services is starting to lead. Are you guys seeing this? It's been a long time since we've seen that. And if we go down here to the stock fetcher, to the monthlies, just look at this. So look at it over the last month. Healthcare, communication services, financial. Look at energy. Look at basic materials. So something is definitely happening here. It's not normal for communication services, which I told you about 2 months ago. They stopped going down. Communication services are now the strongest sector on a monthly basis. That is significant. On the last 5-day basis, you've got communication services, healthcare, but look at energies, utilities. They're all the way at the bottom. That's not a positive sign for a bear market. That's a positive sign for a bull market. So there are a couple of things happening. Let's talk a little bit about global economy. European benchmark was higher Monday after most Asian markets retreated. Bitcoin hovered near 20,000. That Bitcoin is not doing anyone any favor. It's taking a lot of speculative monies in Bitcoin. U.S. futures advanced. Oil prices fell back early Monday. Price of world's most popular cryptocurrency remained near the psychological 20,000 level. At one point, it plunged to 18,600. And I think Bitcoin may be bottoming out around these levels too, which would be bullish for the stock market because there's a lot of speculative money, as I said, in Bitcoin that will go into tech stocks. Given China's struggle to bring outbreak under control and its already faltering economy, rate cuts in the coming months are still likely as we expect economic recovery to slow under the COVID zero policy. China and Japan don't want to don't want to raise rates. Two of the world's three biggest economies, Japan and China, are not engaging in raising interest rates. They're not engaging in raising interest rates, unlike the U.S. Federal Reserve and central banks. Worries that the global economy might slip into a recession if the planners push ahead too aggressively with interest rate hikes and other moves to tighten policy have caused markets to backtrack. They're doing the opposite of what we're doing here, and honestly, it may not be such a bad idea. But yeah, we got to jumpstart this economy. Testimony on monetary policy by Jerome Powell before the Senate committee is going to be big this week. He is going to be speaking Wednesday and Thursday, Wednesday at 9:30 and Thursday at 10 a.m. Eastern Time. Markets are bracing for a world with higher interest rates led by moves by Federal Reserve. But remember, folks, markets tend to price things in, and just about all the rotten stuff we've got going on in the world is priced in. Higher rates can bring down inflation, but they also risk of a recession and slowing economy. It's a balancing act. They also tend to hurt prices for stocks, cryptocurrencies, other investments. A report last week in the U.S. economy showed industrial production was weaker last month than expected. But again, remember, markets are forward-looking. NASDAQ 100, way oversold. Volatility did not take out a high when the Dow Jones did this. Look at the Dow Jones. Broke lows. Volatility did not break down right here. Volatility did not make a higher high here than it did over here. Look, VIX is making lower highs. The Russell 2000, see, lower highs than this right here. Russell 2000 is near COVID levels. Look at this. We're near COVID levels right now. PE ratio is 14. And most importantly, healthcare, financial technology, communication services, I hate to say I told you so, not energies or consumer staples or utilities are starting to lead on a monthly basis. That's a very strong sign that bulls are in fact coming back. Right now, what you want to pay attention to is this. Let me show you. We want to see the Dow. We want to see the Dow come back up to the 50-day moving average, which is at 32,800. We want the SPY to come up to the 411. If you're looking at the SPY, the 415, 416 level, and we want the QQQ. We want to see the sucker go up to the 307 level. Again, keep your eye on the Russell 2000. Here's some big clues for you. If you start seeing the Russell 2000 strong or stronger on a percentage basis over the next couple of weeks than the NASDAQ or the S&P or the Dow, there's a good chance the market is trying to find a bottom. It may not find it, but it's getting very, very close, especially when you look into these momentum levels that are starting to mirror what we saw in 2008. Look at this. There's 15 stocks trading above the 200-day moving average. In 2008, there was 7. In COVID, there was 11. Now we're at 15. There is right now 6 stocks trading above the 50-day moving average. Lower than 2008. So I think the market is starting to look for a bottom, and hopefully we're finding it sooner than later. Now, I've got something really juicy for you. Folks, I uncovered 64 secret market patterns that date back to this 18th century, and I did this about 6 months ago through one of my most trusted back testing systems, AlgoTrader. These patterns were created to lead price action and predict explosive moves before they occur, not after the fact, before. They're predictive patterns. So I set out to refine them by unleashing the most powerful algorithmic trading system that I know of. And I had one goal and one goal only in mind: isolate the top patterns with as close to a 100% win rate as possible. But what I uncovered during the testing process, it shocked me to the core. And I mean that, shocked me to the core. Not only did I stumble across a brand new way to trade stocks, but I completely uncovered proof, literally proof, that what's being taught on Wall Street by these little known patterns It's complete nonsense. It's BS. It's false. Folks, you've been lied to for decades. I'm not kidding. Wait till you see this. This is eye-opening. Follow the link below now, because you won't believe this unless you see it for yourself. I'm not kidding. You've got to see it. I took 64 patterns, threw most of them away, found 5 that are crazy good, and some of them are supposed to work in a bear market. Heck, they work in a bull market 10 times better. But don't take my word for any of this. See the results for yourself. Costing thousands of dollars of research, back tests. Follow the link below. This is groundbreaking. You've got to check it out, and you've got to check it out now. I'll talk to you guys soon. Have a great day. Follow the link below. Check out Pattern Trader now. Folks, do it now before it's too late, and have a great day. Give me some feedback, some love letters. I haven't heard from you in a long time. Bye.